Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is June 10th, 2024, my little son's birthday. Happy birthday, Brian. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. Outline what the levels are in play, what are the risks, what are the biases, what are the targets, things like that. So let's get started. Looking at the euro versus US dollar, we gapped lower off of the European elections that showed a shift more toward the right. That took the price below the 100-day moving average. Of course, on Friday, we moved sharply lower as a result of the stronger than expected U.S. jobs report last week. The ECB also cut rates by 25 basis points. Doesn't seem like the U.S. Federal Reserve will look to cut rates this week, or maybe even this year. Things continue along this path, but they are expected. The expectations are going forward through the FOMC rate decision is that the Federal Reserve in their dot plot will either forecast either one or two cuts, or maybe in between now and the end of the year. That's down from three cuts seen at the last March meeting when they made their prognostication. Technically, on the euro versus US dollar, as mentioned, we went below the 200-day moving average. We also fell below the 50% retracement level of this move up from the April or May low to the high price that we saw in the month of June. That 50% comes in at 1.0782. The 200-day moving average comes in at 1.07864, and you can see that the rebound price off of the initial opening came up to test that 50%. Found willing sellers against that level, and a push to the downside. That move to the downside has taken the price down to this swing area down through here. And I'll go back in time. Actually, I'll go to the 4-hour chart to give you a better view. This area is started back here in the month of, I guess that's March, early April, and we had a number of different swing lows and swing highs before breaking to the upside right through here. Wasn't until today that the price could move back into this swing area and found some support buyers. So we'll see if this area can now hold support, but certainly the sellers are more in control from Friday's decline, from today's decline. By the way, the price also moved below the 100-day moving average on Friday, and also this rising 200-bar moving average on the 4-hour chart. So a bunch of moving averages were cracked over the last 2 days in the euro versus US dollar, tilting the bias more to the downside in that pair. Let's take a look at the dollar versus yen next. We'll take a look at the hourly chart here. And what we saw in trading on Friday was a sharp move to the upside off of that US jobs report. The corrective move to the downside that we saw intraday came down and retested the 200-hour moving average. Yes, the market moved just a few pips below that level, but the market quickly rebounded back to the upside, closing above that 200-day moving average. And also this swing area through here. The swing area formed a floor, and through here, here we did break below it here, but then reestablished the floor here, and here before breaking below the level through here. We came up to retest it sort of closely over through here, but then broke above it on Friday's trade, and then came down to that just a little below that level here. So this swing area and also the 200-hour moving average is now a risk level for buyers. If the price were to move below those levels, then I think there'd be disappointment. But if the price were to stay above that level, and we are currently at 156.97, the bias remains more to the upside. Now on the top side, we also have this level right through here that had earmarked as a level of interest coming into today after the last week's trading. That level corresponded with this swing high back here that wasn't broken until this area and this area a few weeks ago. So that level at 157.20 did hold resistance. We do need to get above that level to increase the bullish bias going forward. Then we'll start to look toward other levels, including our high prices that we saw in the month of May. Finally, let's take a look at the sterling versus US dollar. Look at the 4-hour chart because it's easier to see. This support level right through here, where we had a number of different swing lows come in play through here, maybe some support here, but we came down to that level through here and found support buyers against that level on the first look. We've bounced back above the 127 level. We do have the 100-bar moving average on the 4-hour chart at 1.2737 as resistance on the top side that we're going to need to get to and through if we're going to the buyers are going to take more control. Absent that, And there's a battle going on, I should say, and that battle is at the swing area, and also this 38.2% retracement of the move up from the low price that we saw in May to the high price that we saw in early June. So that 38.2 comes in at 1.26747. If we break below that level, then we'd start to look down toward this two moving averages through here, which represents the 200 bar moving average on the 4-hour chart and also the 100-day moving average. So 100 bar moving average at 4-hour chart is resistance, 38.2% retracement swing area is support. Below the two moving averages down here, if we break above the 100 bar moving average, we'll be looking toward our higher prices in the sterling versus US dollar to target. So that's my look at three of the major currency pairs from a technical perspective. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.